Welcome to Pennsylvania Newsmakers, and as always, thanks for watching. Well, it's called FinTech. You got to stay around for an explanation of what that means. It literally is going to affect all of us, and it's very important. But first, how about this? Nursing homes funding. Let's get a quick update on nursing homes. We're all going to need something to take care of us in our old age, and we'll do that in a moment.
This is Pennsylvania Newsmakers, a fast-paced, unrehearsed weekly discussion with and about the leaders who shape your world. And now, here's your host, Terry Madonna.
Well, as many of our regular viewers know, we had Governor Wolf on a couple of weeks ago talking about his budget message. There's a myriad set of programs and recommendations to the state legislature. We had the Republican House Majority Leader on, following the governor to get, again, the reaction by the other side of the aisle. And we're going to talk about an important aspect of the governor's budget, and that is nursing homes, what happens with folks who go into nursing homes and the funding for them and how that's going to affect a lot of senior citizens. Joining me to talk about that is Zach Shamberg. He's the Director of Governmental Relations for the Pennsylvania Healthcare Association, and the guy who's Chairman of the Board of the Pennsylvania Healthcare Association, Sean Buckman. Gentlemen, welcome to the program.
Thanks for having us.
Thanks. All right. Well, I think we all know that there was various reactions to the governor's budget. Overall, the Republicans liked the fact that it didn't call for an income or a sales tax hike, and governor had some other things in there they're not wowed about. But overall, the reaction was much more tepid than we usually get out of the opposite party, whether it's Democrat or Republican. And so I want to ask you, Sean, the governor's recommendation covering nursing homes was not as good as your organization would have liked it to have been. Is that correct?
Yes, Terry, that's correct, and thanks for having us on.
Oh, my pleasure.
This budget is a disaster for our facilities, and our facilities are homes to mothers and fathers and our neighbors. For the fifth consecutive year, we've been flat funded in Medicaid funding. And it just seems unfair that we're treated this way. A Medicaid resident is someone's mother or father that requires 24 hours, 7-day-a-week care,
right,
and has simply outlived the retirement savings.
And that's not uncommon.
It is not uncommon.
Yeah.
And people are living 20, 25 years into retirement,
right,
and savings, one bad medical event, and the savings are gone, and the safety net is Medicaid. And if they require 24/7 care, nursing care, and Medicaid,
yeah,
it needs to be there.
And let me get this straight. This is care that can't be, by and large, provided in the home, right?
Correct. These are medically complex and very difficult cases, and they require 24/7 care.
And Terry, when we visit nursing homes, and there are many days when I'll bring legislators into nursing homes, I always ask them before we take a tour of the building, I want you to look at each and every resident and tell me who shouldn't be here, who is well enough to be cared for at home. And you know what? In almost every case, there's not one resident in that nursing home who we can take home.
You know, you operate a nursing home, so you're on the ground. You're not. This isn't a theoretical discussion here, right?
Terry, so I own a building in northeastern Pennsylvania. It's a small building, but I love the building. And 3/4 of our residents are on Medicaid. And Medicaid funding really means when 3/4 of your revenue comes from Medicaid that I'm on a fixed income.
Right.
Our building is on a fixed income. And so 5 years of flat funding really is 5 years of cuts because my costs keep going up. They certainly don't come down.
Yeah.
Of course.
And Terry, if you take the average daily Medicaid rate that Sean is paid by state government, it averages out to about $199 per day or $8.35 per hour. I can get lunch at McDonald's for the same price that it would cost to care for a senior in a nursing home today.
And if you think about what happens in a nursing home, look around. I mean, there's everything from facilities maintenance to laundry to housekeeping, and then there's dietary. You know, people want to eat and they want to eat well, so there's meals and there's snacks. And then we get into the nursing therapy, the doctors, the dentist, occupational speech, physical therapy. There is a myriad of things going on in these buildings for $8.35 an hour.
Look, before we run to a break, here's the question. If they don't get this care, I mean, it's almost unimaginable. I mean, what happens to them?
If we keep going this way, we're going to find out.
Yeah, but I think we all get the point, correct? We all get the point if they don't. Well, I understand that.
No, we don't.
But rationally, we should get it. Or am I wrong about that?
You know, it's our seniors that reside in these facilities. They can't come to Harrisburg and lobby and advocate. They rely on us to do that. And sometimes it's just, we need them to come down, I think.
All right, we're going to run to a break. When we come up, we're going to switch subjects and talk malpractice. What does all that mean? Hang in with us and we'll explain it.
This broadcast of Pennsylvania Newsmakers is presented by the Pennsylvania Chamber of Business and Industry, the statewide voice of business, and by the Pennsylvania State Education Association and Partners for Public Education, bringing the power of a great education to our schools, our students, and our communities. This broadcast of Pennsylvania Newsmakers is brought to you by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Please visit pahighwayinfo.org. And by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business.
Well, welcome back to the program. Well, it goes by the term venue shopping, and it has to do with malpractice suits, and it's turning out to be a pretty big issue. And Zach Shamberg is going to explain this to us all, aren't you?
I'm going to try, Terry.
Well, you will do it. Take it.
So to really understand the issue now, you have to go back. You have to go back to the late 1990s and early 2000s when, in no uncertain terms, there was a healthcare crisis here in Pennsylvania. So you had doctors, specialists, nursing homes, hospitals, who were under attack from attorneys who were filing medical malpractice lawsuit after medical malpractice lawsuit. It got so bad that the legislature took notice. They acknowledged that there was a crisis, and they passed a series of reforms or protections that ultimately became known as the MCARE Act. Right. So the MCARE Act did many things, but one of the most important things that it did was provide a ban on venue shopping, or the ability to shop a lawsuit to a more favorable jurisdiction. And in almost every case, that favorable jurisdiction is the city of Philadelphia. Mm-hmm. So you've got nursing homes here in Dauphin County, in Cumberland County, in Lackawanna County, where Sean operates, who are being dragged into the city of Philadelphia to defend themselves when the incident in question may have occurred hundreds of miles away.
Yeah, we'll take it. What's the practical effect on somebody like you? I mean, you operate a nursing home.
So when a civil suit is brought on and they bring it, in a jurisdiction that is not home, so you won't, be tried in front of a jury of peers. You'll be tried by a jury, 200 miles away. You have to go through depositions. You have to go through discovery, and everything is in Philadelphia or Philadelphia area, and you're taking your staff away from your residence and the cost, and you're taking them to Philadelphia to be deposed, to be interviewed, and it's really trying on the staff. First of all, to be deposed, but second of all, to do it in Philadelphia, take them away from the residents, and it just adds more cost to the system.
So we just talked about the funding crisis here in Pennsylvania. This is, to Sean's point, another added cost on healthcare providers.
Yeah. Yes.
Well, let me ask you this question. Where is it now, and what's likely to happen?
Sure. So luckily, the state Supreme Court has delayed their decision. Right. So recently, the state Senate passed a resolution that directed the state's Legislative Budget and Finance Committee to actually study this issue. So that study is due January 1st, 2020. There's a delay, and we're thankful for that. Unfortunately, it's only a delay. Now, I will say that in the 2 months since this rule was proposed, there's been an open public comment period.
And what's happened? What have the comments been like?
So I could tell you that nursing home providers have sent in hundreds of comments. Physicians have sent in thousands of comments. Specialists, hospitals. We had everybody from CEOs to direct care workers telling this committee why this proposed rule change was wrong. And I think we owe a big part of this delay to the state Senate, but also the advocates.
Go ahead.
And as a business person, I have a hard time understanding how come this is just applied to the medical community. This should be applied to all businesses. Venue shopping is just something that's wrong, and it's wrong for business in Pennsylvania.
Go ahead.
Well, Sean's exactly right that there are many detractors who would point to healthcare providers and medical malpractice lawsuits and say that we're in a special class or a class of our own. And I agree. Venue shopping should, or a ban on venue shopping should apply to every single business in Pennsylvania.
Now, let's make sure so our viewers and I have a sense about what we're talking about here. Is this something that the legislature can deal with, pass a law, let the governor sign it? Or is this is this exclusively in the hands of the Pennsylvania Supreme Court?
So you said it. It's in the hands of the Pennsylvania Supreme Court, and more specifically, a obscure committee under the court that 2 months ago decided to propose this rule change. And their reasoning for this rule change was that the number of medical malpractice cases in Philadelphia has dropped so dramatically that we don't need the rule anymore. And Terry, I'm not a lawyer, I have no legal background, but I want to give you my interpretation of that. The rule has worked, so let's get rid of it. It's kind of like standing in a rainstorm with an umbrella over your head, and you're saying, I'm not getting wet, so I don't need that umbrella anymore.
All right, before I let you go, I have to, you run a nursing home.
Yes.
I mean, what are the important elements in that when you try to apply, when you got to do some planning here?
I can't imagine a more difficult business. If you think about what we do and the regulations that are involved and what we actually do, we care for frail, sick, elderly, and we do it with compassion. We have some of the greatest people in the world, and we've been doing it underfunded, which is,
Right.
So our caregivers are falling behind, and it's hard to attract caregivers.
Not to get personal, my mother, before she passed away, and spent some time in a nursing home in Lancaster County, and it was important because we could not have begun to take care of her in her home.
And it's a community, is it not?
Yeah, you're exactly right. All right, I think we're about out of time. We're going to talk about FinTech. It's something that I think involves so many people. It's very important, and we'll see you back in a moment.
This broadcast of Pennsylvania Newsmakers is brought to you by the Pennsylvania Credit Union Association. Pennsylvania Credit Unions, where people are worth more than money. To find a credit union that is right for you, check out ibelong.org. And by the Energy Association of Pennsylvania, Pennsylvania's energy information source. This broadcast of Pennsylvania Newsmakers is brought to you by the Association of Pennsylvania State College and University Faculties, representing the faculty and coaches who are devoted to providing quality public higher education for Pennsylvania's college students.
Well, as I mentioned in the promo, FinTech, it's going to involve every one of us at some point in our lives with our banking and our financial activities. Joining me to talk about that is Ken Dyer. He's a Senior Vice President, Chief Revenue Officer with the Pennsylvania Credit Union Association, and Sam Dawes. He's the principal at CMFG Ventures. I have to start out. CMFG Ventures, what's that about?
Sure. So we're actually the venture capital arm of CUNA Mutual, an insurance company that has supported the credit union industry since the beginning for the past 85 years.
All right, you got to explain to me and to our viewers FinTech. First of all, what is it? And then the important question is, why should we care about it?
Absolutely.
What is it?
FinTech is just simply short for financial technology. It's just the way that companies leverage technology to deliver financial services. Now, FinTech has been around for decades, but the current activity, particularly as it relates to consumers, can really trace its roots back the last 10, 12 years, really through two main developments. The first being the introduction of the iPhone, and just how that created a massive shift in mobile technology, essentially redefining the consumer experience. And the second kind of precipitated out of the fall of Bear Stearns and the bringing upon the financial crisis. Right. What you ultimately saw was a fundamental disconnect between consumer needs and what traditional financial institutions were actually delivering. I would say that given those two catalysts, you saw a opening for new companies and startups in particular to really disrupt the status quo. What's interesting is, the boom that we're seeing in financial technology shares a lot of the same DNA as the birth of the credit union movement. Both were serving to address how the broader financial ecosystem was failing consumers, particularly in niche markets, whether they're teachers or farmers or workers today.
So the bigger point here is that we're now doing our investments, we're now doing our financial activities, I'll be blunt, online, using technology. And that's a boon in one way because it's easy, you can do it in the comfort of your home, but it also has a downside to it. So how is this affecting what you do in your life?
Well, I think what's important to us is FinTech for us and for credit unions and financial institutions is just the pathway to service. And Sam was really clear on the fact that, you know, your communication device is the vehicle that gets you there, but you're still going to the same place. In the case of a credit union, it's trusted, it's been in place, it's regulated. So FinTech is a way for service to get delivered more efficiently. And it gets delivered in a way that the members or the customers want.
Well, let me ask this. Walk through at least one way in which you would use this in one of the services that you would expect to get if you're making an investment, if you're making some kind of a contribution into one of your own funds with a credit union. Go ahead.
Well, I mean, the number of applications that consumers demand today, just in terms of applying for a loan. They want to do everything online, and they want instant results. Now, the ability for traditional financial institutions to deliver that, it's still a pretty big hurdle. And so you need these companies to really innovate on how to really deliver that user experience that consumers are demanding, but to serve that in a compliant and in a regulated way that still ensures that people's monies are being protected.
What does it mean directly?
Well, I think it goes from the change to advertise to advise, and it
advertise to advise. Go ahead.
So the old model was I'm throwing you advertisements and trying to explain to you why we're so great. But this is the opportunity for credit unions, financial institutions, to be able to advise their clients in the event of investments. What's good for you? What's specific to you? What's handcrafted to you? So it's not about this box that we're throwing at. Everybody gets the same box. It's individual.
Individualized.
I think
that's an important point. We're going to run to a break. I want to talk about some of the trends. But when you think about it, just the change in the last 10, 15 years in the way in which we do use all of these services is amazing. And maybe the millennials are more likely to adapt quickly. But for some folks, for elderly folks, it may be more of a challenge. But let's talk about the trends and where does all this go. We'll do that in a moment.
This broadcast of Pennsylvania Newsmakers is brought to you by the Pennsylvania Medical Society, inspired physicians committed to the good health of Pennsylvanians and the advancement of the practice of medicine, and by the Pennsylvania Healthcare Association, the future of long-term care.
Well, first of all, I would not have mentioned, I would not believe that, imagine this, 67% of customers use digital banking and 15% are mobile dominant. What's mobile dominant mean?
That really means that the consumer is using their mobile device as their primary means of interacting with their financial institution or financial service.
Okay. What are another trend or two that I think our viewers would like to know?
Well, I mean, you're seeing new entrants coming into the marketplace to serve those mobile dominant consumers. JP Morgan has Fin, which is their mobile-only platform. You have a number of players from Europe coming in, like Chime and Revolut. But that's not to say that mobile dominant is the only way to go. There's still a very large segment of the population that still values a branch and being able to have that local presence.
I mean, physically to walk in and
absolutely.
Yeah.
They have questions.
Maybe I'm a little old-fashioned. I kind of like that.
Yeah.
Now, you wanted to make a comment.
Well, let me just go back a little bit, because I
Sure.
think one of the things was really important. They want to go into the branch, but they also want that financial institution to be part of their community, to support their community, to be there, to support whatever is important to those people in the community, not necessarily their customers or members.
Yeah. Well, back to the point that I sort of joked about, but it's pretty serious. Young folks who are just getting into the banking, credit union, whatever they're doing and their investments, and you see them, they come into your. Am I right about that?
I think what is important in this is when somebody goes into a credit union, they're part of that community and they're trusted.
Yeah.
And the reason they've earned that trust is because, one, they're heavily regulated. That's not a bad thing. It supports all of the pieces that FinTech delivers. So it gets delivered in a safe way, in a sound way, so that people's identity can be safeguarded and their funds can be safeguarded.
Yeah. There's the adage that, cash is king. In this era, customer is king. And how do you really deliver those services in kind of an omni-channel approach? And really
and
meeting
it's
where
changing consumers.
Absolutely.
It's enormously changing, and it's changing at a rapid rate, or am I wrong about that?
I think you've got it right. I'm just going to give you a different thought on it, is the consumers are changing us, and I think that is the best thing about it. For FinTech to be able to be reactive to needs in the marketplace, to be able to put together development that is specific to areas, customers, and requirements and needs, that's the best part. Us being able to move to make sure that
But you have to be concerned about fraud, identity theft, and there are steps that need to be taken to protect yourself, correct?
Absolutely. I mean, the regulatory and compliance environment for financial services, there is a tremendously high standard. For FinTechs, particularly early stage startups, they still need to be able to adopt to that ecosystem. Right. And there have been a handful of startups that have gotten into trouble in that regard. I think what has to be understood is, a FinTech startup can't necessarily act like a traditional startup.
Right.
There has to be a recognition that they work within a broader regulatory system that needs to be paid attention to.
Right.
With that, the credit unions act as a great partner because they have long-standing relationships. They understand how to interact with both the regulators and the consumers, and so they have that infrastructure.
And there's you provided me with a whole list of sort of steps. Review your, to protect yourself. Review your account, take advantage of alerts, check your credit report. Go ahead.
Yeah, I think those three are key, and especially the FinTech allows us to create alerts that support what's going on here. This is a little bit different than what we've seen before. Artificial intelligence delivered as part of these services allow us to both predict and react very quickly to any breaches.
Yeah.
Those are the important things, but make sure you're keeping an eye on your information. If you have a partner that is doing part of your banking and you're doing another part, make sure that those things are coordinated and within the household.
Here's the one that I like. Buy a shredder for those credit cards and insurance officers, and don't give your Social Security number out. I think we all... Look, I want to thank you for coming in. This was very important and a great update. All right, we'll see you next week for another edition of Pennsylvania Newsmakers, and as always, stay well.